Hey guys, Be Twice here. Today is Saturday, December 4th. I hope everybody is having a really good weekend. Today we're going to be taking a look at the S&P 500. We're going to look at SPY, and we're going to look at ES, and we're going to look at some bull counts and some bear counts to try to figure out where this thing could potentially be going here in these upcoming weeks. But before we get this kicked off, I just wanted to tell everybody I've created a trading Discord. It's free to join. I post all of my trading view charts into that Discord, so I will drop a link in the description. The link is only good for 7 days. So if this video is more than 7 days old, when you see this and you want to join the Discord, just drop me a line and I will give you a new link. Okay, so with that being said, let's kick this off. Let's take a look at SPY first. So let's look at this correction. So obviously we hit these all-time highs back here on November 22nd. And since then, it's been nothing but flushing. And we can clearly see that we're having three wave moves, right? So from here, you could count 5 waves down. So real quick, you can see it with me. 1, 2, 3, 4, 5. So there's 2 ways I could count this. I could either say that this is a 1, and then we're popping up for a 2, and then we're going to flush for a 3, 4, 5. So it'd be an impulse. Or I can say it's an ABC move, depending on how it plays out. So what you can see what happens here is we pop down for either our 1 or A, we pull back with 3 waves to the upside, and we hit this, we create this downtrend line. So we call that our B, and then we flush down here for what could have been a 3 or a C. But based on how we reacted off of this level right here, we pop back up to the downtrend line, we can conclusively say that no, that can't be a 3, that has to be a C. So we popped down for an A, we went up for a B, we pulled down for a C. So because we're still in the correction and this wasn't bottom, right? Because that could have been bottom, we could have gone back up to all-time highs, but now we've let price action show us it's not going back to all-time highs. Obviously, it was already rejected off the downtrend line again. So we know right here that this has to be a W, right? Because now it's becoming more than an ABC simple zigzag correction. It's becoming a 7-wave or maybe even an 11-wave correction, or maybe even deeper than that if we've already topped. So we can then call this a W. So then we pop up for our X, we get rejected the downtrend line again, and now we can just do the same thing again, count 3 waves. So then down here we have the ability to either say that this is the end of the correction. It's either going to be our wave Y, or we might have what's called a nested WXY correction, meaning in your initial 3 waves down, you have a W. You pop up for an X. And then to finish that off, not only do you get 3 waves moves down, you get 3 wave move down for a W, pop up for an X, and pull back for a Y. So what that means is off of this X, you're going to see a 3-wave move. We've only had 1 so far, so that's why you guys can go onto the Discord. You can see my my bull count, or any of my charts for that matter. You see what I'm drawing. I'm drawing that we pulled down for an A, and we've popped off this pivot AVWAP from the last, I want to say it's primary 3 all-time high before we got to the new all-time high. And basically, we popped down, we bottomed there, which is also the 100% extension, and now we've popped to the upside. So what I'm expecting is that we're going to pop up to this downtrend line again, the secondary downtrend line. It's called a secondary downtrend line because our primary downtrend line is from all-time high off the very next lower high. Now, then we come down here, and we didn't quite get to that downtrend line. So we've basically created a new downtrend line, and I have it drawn a little bit off because it was drawn on the daily chart. And obviously, when you go between daily and hourly, it changes a little bit. But basically, every time we've now hit that line or got a little bit above it, you can see by these candlesticks with the long wick that we've been rejected above it. So pretty much any time we touch this line, it's a short. So what I think is going to happen is early next week, we're going to pop to the upside. We're going to kiss that line again, and we're probably going to flush into this buy the dip zone. Now, with that being said, you can see where I'm calling wave A. That is already in the buy to the dip zone. We're already down here past the 100 extension, meaning we could technically have our wave Y bottom already because we're past 100 extension. So if my count is wrong, we may not make a new low. Maybe we'll just come back down here and we'll create a double bottom scenario, but we already kind of look like we have that. So I could be wrong, and maybe we do just launch above this downtrend line and this one. Time will tell, but I do favor for right now is that we're going to pop up for this B, we're going to pull back for the C, and I think we're going to get back lower into the zone. I think possibly even down to basically 445 area, which is the 61.8% retracement. So anybody who knows wave theory knows that the 61.8% retracement is the most common place to find a wave to bottom. It just so happens that our Y, which is normally found between the 100% to the 161.8% extension, is also in this area. So this is the highest probability for us to find our wave to bottom. Now, with that being said, I put up a Twitter link in the Discord earlier this morning talking about how below 4,500 on SPX that there's extremely negative gamma, and basically it could create a waterfall effect. And that's why when we broke beneath it, because SPY basically 450 is right around SPX 4500. When we broke beneath it on Friday, we quickly got bought back up above it, because anybody who's long or who has short puts that has a lot of money does not want to see market makers have to start selling to hedge their options that they've sold. So with that being or bought. So with that being said, they're going to try to protect this line at 450. So there's a chance that we don't break beneath it, even though I am favoring somewhere around 445 to be the bottom. So we'll see if we get there. But either way, I do think that anywhere in this area is a buy the dip zone, because we should be jumping out of it. So with all that being said, let's look at these indicators real quick. So RSI, you can see we've had bearish divergence going on for quite a while. So it's kind of common to see anytime we've touched this trend line, we've sold off, or anytime we've even got really near it. So you can see right here, bang, you could have bought puts to swing to the downside. Oh, you touched it right there. Obviously, when we kissed it here, you got paid if you bought puts, because you could ride it all the way back down. We popped up for our wave B, same thing. Every time we touch the trend line, we crash. So now we're starting to coil, right? So now we're kind of bouncing back and forth. So now basically what you can see by this lower trend line is anytime we kiss the lower trend line, you can buy calls. And anytime you touch the upper trend line, you can buy puts to swing into the next day. Obviously, it'll work until it doesn't. At some point in time, this thing's going to break to the upside or the downside. Hopefully, it's to the upside, and we'll break out into massive wave 3. But time will tell, because the bears want to break to the downside. So that's what you can look at about the RSI. So let's look at the MACD. Same thing. So this is bullish divergence on the MACD. You see how every time that we've made a new peak down here, it's been a little bit higher up. So that's bullish divergence. And anytime you cross, that's a bullish cross, right? So we're kind of coiling now too, because I could have drawn a line up here. But anytime that the blue line crosses the orange, that's bullish. It means you're probably going to see a pop to the upside. And that's what's making me favor, hey, that we're probably going to pop up for this B. I still think that we're going to end up getting rejected. So you could draw a line off this off the upper part of the MACD, and you could find the spot to go short. But I honestly think what will happen is that we'll probably pop positive on Monday, and then we'll flush back down, and maybe even by midday, we'll regroup from this area and start to pop back positive. Time will tell. So that's to look at the MACD and how you kind of look at it to try to figure out what trade to take. Now, mind you, we're on the hourly, so when you're on, depending on what time frame you're on, these are all going to change. I look at the hourly because that's where I do my counts, and that's how I trade. I like to swing trade SPY or ES or SPX. So with that being said, I look at the hourly because sometimes I'm buying 0 DTE or 7 or 5, whatever. I'm buying short-term options when I'm playing this. So that's why I'm looking at the hourly frame, because if I can make a move and then in 2 hours get out, that's great, because I don't even have to hold overnight. So that's why I'm looking at these indicators. So now we're going to look at the percent R. So I've drawn this line across the percent R here on the bottom. Every time we've touched it, we've bounced off of it. So it's another indicator you can use that says, hey, when can I buy some calls, maybe even some 0 DTE, whatever, just for a swing? And you can kind of watch this on the hourly and see it comes down. And when it touches it, it gets that nice rejection off it. You can even see how we got the rejection off of it last week. So that's how you use these indicators, and even the tops are starting to show some divergence too. So it's kind of coiling a little bit, but it's the same thing. When the percent R gets up here and touches up here, it's basically, hey, let's buy some puts. And when it gets down, when we get down here on the indicator, we touch this bottom line that I've drawn, you can swing some calls. All right. So now with all that said, and I've explained the entire correction of how I've counted the WXY. So what am I favoring for the bull count? Well, this is a wave 2 bottom. What that means is the next one's going to be a wave 3. So it's going to be a massive move to the upside, and we're going to see an impulse. And I want to say it's taking us up into the 500 range. So the low price target would be 491. The upper price target would be 520. That will probably take us into next year if we do get it. Sorry, I just moved something. If we do get it, but this is where I expect our buy the dip zone to be. And you're going to see in a second when we get into the bear count that this is still a buy the dip zone regardless. Okay, so that's the bull count. If you guys have any questions, post some comments or reach out to me on the Discord, message me, whatever you got to do. Okay, so obviously I'm taking a lot of time talking about this. So now let's look at the bear count. So in the last count, which I don't know if I touched on because I went over a lot of things, that this 5 is going to be labeled as a wave 1, meaning right now our correction is taking us for a wave 2. A higher degree wave 1 and a higher degree wave 2, because that's how wave theory works. So now what happens if that 5 that I had labeled here, really those 5 waves up were actually an intermediate? So this is a minor count, the intermediate's in parentheses. So what happens if this is actually a move instead of the minor like I have counted on the bull count, right? That's a minor, that it's actually intermediate the whole way up. So we have an intermediate 3, an intermediate 4, and an intermediate 5. Well, what that means is that our cycle wave one top is in. Well, that's not good because that cycle goes all the way back to the COVID crash. So what does that mean for us? Well, that means we're in for some pain, right? So that's not good. I've seen a lot of wave theorists that have the bull count, and I've seen a lot of wave theorists that have the bear count. And either one can still be valid right here. So, like, if both can be valid, what do we do? Well, we need to let price action tell us what to do. And that's kind of why I've created the Discord, right? Is I want people to see my charts on a daily basis, and I will give you guys my thoughts on it, and we can kind of work together, and maybe other people can tell me what they see, whether or not they think I'm wrong, so we can kind of work together to figure out where this thing's going, right? Because the ultimate goal for us, everybody in the market, is to make money, right? Like, we're all on the same team. I want you to make money, and obviously you should want me to make money. If we both know where this thing's going to go, then we can obviously make money together. So if we're in a bear count, then well, what do we do? So it's the exact same count. There's no difference in the correction. The difference is that when we get to this bottom down here, we're not going to have a wave two. It's going to be another higher degree W, right? Because we still have the Wxy correction. So where I have wave two on the bull count, it's just as valid to say that no, that's not going to be a wave two bottom. That's going to be a new W. Well, shit, if that's a new W, well, what does that mean? Well, that means that we're going to get a three-wave move to the upside. It's just going to be a higher degree wave X. Well, how do we figure out the price target for a higher degree wave X? Well, that is between 50 to 61.8% retracement of the move down. So because this entire move down is going to be this higher degree W, what you would do is, and I'll delete this off just to show you guys. What you would do is you would take a retracement tool, take it from the peak, and bring it all the way down to where your expected bottom is. Now, you could say that your expected bottom is going to end up being right at the W, at the 61.8. You could say it's all the way down here at the 161.8. Let's just put it all the way down at the 161.8. If we put it all the way down at the 161.8, which is worst case scenario for this Y, because it can't go past the 161.8 in wave theory. So worst case scenario, we're going to put it there. Well, where does that put our 0.618% retracement, which is the common retracement you get on a relief rally? Well, that puts it right here at this downtrend line. Well, shit, that looks like it matches pretty good. So there's a really good chance that we could just be in a higher degree correction right now, right? We could be in a cycle wave two, but we're still going to get this move to the upside, and we're still going to get to 4,600 on ES. What does that mean in SPY? Well, that's about 460, and we're trading at like 453 right now. Well, if we can get this dip early next week, right? We pop up for a B, we pull back for a C. If we can get to 445, or we can get to 448, whatever it is, right? Because we're just going to be looking for signal to buy in. If we can get down there and we can just swing trade to ride SPY or SPX up to this 4,600 or this 460 level, you can still make a pretty penny off that move. And then you're just going to be looking to grab shorts up here near the downtrend line, right? You're going to be looking for signals of weakness. And just like I did last week, I'll post those in the Discord when I see them and I think it's time to go short. So with all that being said, this is what the bears are seeing. They're seeing a cycle wave one top. We're pulling back for a W. We're very close to that W bottom. So very soon we're going to get a pretty nice relief rally up to this downtrend zone. And in this downtrend line or zone, we're going to get completely rejected. We're going to head lower, significantly much lower. Before the next time we find bottom, we'll probably be somewhere in the 4,300 range before we get a nice next rally off of that. So let's look at these indicators real quick, and then I'm going to get done with this video. I'll probably create a new one to talk about QQQ. Let's look at these indicators because we're looking at ES and not SPY. So it's pretty similar. As you can see, we have this divergence. And look at the MACD, and I think I forgot to talk about that on SPY, that the MACD was curling up. So either way, and we down here on the percent R, we kissed it and we rallied up. So we could get another little pullback and then kiss and go. We'll see what happens. I hope you liked the video. If you did, please like and subscribe and join the Discord. All right, guys, have a good one.